Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Thursday, July 30, the EURUSD pair rebounded from the 38% Fibonacci retracement level 1438, reversed in favor of the euro and resumed its advance, consolidating above the 61% Fibonacci level at 1.1501. As a result, the euro gained approximately 150 points in just 2 days. Today, another rebound from the 1507 would allow bulls to continue their advance toward the 76% Fibonacci retracement level at 1.1551. A consolidation below 1507 would favor the US dollar and open the way for a decline toward the 50% Fibonacci level at 1.1472. The wave structure on the hourly chart has turned bullish, although the most recently completed downward wave broke below the previous low. But that latest upward wave also surpassed the previous high. The geopolitical situation remains tense as Iran and the United States continue their blockade of the Strait of Hormuz, while negotiations are currently not taking place. Traders had been expecting support from the Federal Reserve for about a month, but those expectations were not met following Wednesday's meeting. After a prolonged pause, bulls have regained their initiative. On the 4-hour chart, the pair has consolidated above the descending trend channel, suggesting not merely a bullish rebound, but the potential beginning of the sustained upward trend. Consolidation above the 76% Fibonacci level at 1514 supports the case for further gains toward 1578. No developing divergences are currently visible on any of the technical indicators. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 76 pips. The value for this currency pair is considered as moderate. On Friday, July 31, we expect movement within a range bounded by 33.50 and 35.02. The upper linear regression channel is pointing downward, indicating a bearish trend. The CCI technical indicator has entered overbought zone due to a rapid increase over the last 2 days. Thus, a small correction would not be out of place. Trump's policies will continue to put pressure on the US economy, so we do not expect growth in the US dollar in the long term. The year 2026 is still proven to be super positive for the dollar due to geopolitical factors, but every fairy tale comes to an end. However, on the weekly time frame, there remains a flat between 31.50 and 37.80 within a 4-year upward trend, which suggests continued growth of the British currency in the medium term. If the price is above moving average line, it's a sign line on a graphic. Longs would be considered at 34.89 and 35.02. If the price is below the moving average line, it's a sign line on a graphic. Trading on the downside can be pursued with targets 1.3245 and 32.29.
That's all for today. See you online soon.